Now, we've seen oil prices and the dollar index jump, as well as global stock markets remain volatile as the Israel-Palestine war escalates. To decode this for our viewers, I'm joined by Madan Sabnavis, Chief Economist at Bank of Baroda, Vijay Bhamwani, CEO, BSPLindia.com, and Ambrish Balega, stock market expert. Vijay Bhamwani, first to you. Help our viewers understand the spotlight on Iran's oil supply now.
Well, Iran is one of the fragile five in the OPEC members. It's always been violating its quotas, and its output has now very clearly exports have crossed 700,000 barrels a day. And Iran is now wantingly or involuntarily in the eye of the storm, because if at all, the Israelis involve Iran in their retaliatory efforts, because Iran has been backing Hamas, and which Hamas has admitted to. Iran usually threatens to lay mines, naval mines in the Strait of Hormuz, and 22% of global oil supply flows through the Hormuz Strait, which means higher insurance costs, naval escort ships.
All right. And Mr. Madan Sabnavis, the spotlight on the US dollar and gold prices in troubled times.
No, I think on account of this war, the disruption starts from the crude oil price, then there are reverberations to what happens to the dollar, and then it translates also into volatility in terms of the rupee, something which we have already seen today. And then we have issues also in the bond market. So I think there's a lot of interlinkages which are there, right from, and what is really a political issue has economic ramifications as it spreads, starting from crude oil price and the degree to which the involvement of both Iran and the US takes place, and how long it lasts. Based on the experience of last year, we all felt that the Ukraine-Russian war will not really last for that long, but it's carrying on even as we speak today. So I think the length of this entire conflict is really important, and that is what is really going to affect even the Indian economy and our policymakers.
All right. Also, concerns on whether these reactions are knee-jerk or long-term in nature. Mr. Sabnavis, could you take our viewers through those details?
Yeah, at present, I would say it's going to be knee-jerk, because what we have seen in the global stock markets as well as in the Indian stock market today morning, I think there's definitely been a fallout here. The rupee is under pressure, bond yields are on the higher side. So I think everything is going to continue in this way for the next couple of days until there's more clarity about how long this particular war is going to last. So to my mind, in maybe another 2-3 days, we'll get to know about the involvement of Iran. Iran is a major player when it comes to the oil economics, producing around 3 to 4 million barrels out of a total of around 80-85, which was produced last year based on global statistics. So in case there is any disruption out there and the other Arab countries show some kind of sympathy for the Hamas, I think that is where we can really see a spiral in price. So I think what we need to look out for today, very simply speaking, is where is the Brent price? As long as we're below 90, there's no need for panic. But the moment we cross 90 and we see it last for maybe a week or so, then I think policymakers have to get into action.
All right, very important point there. As long as the Brent crude prices are below $90 a barrel, there is no need to panic, says Mr. Madan Sabnavis. Vijay Bhamwani, do you agree with that as well?
I completely agree. I think initially the markets will, in a knee-jerk fashion, see a spike in oil prices, but sanity invariably returns. Wars in the Gaza and Palestine area invariably tend to be short-lived.
All right. I'm also joined by Mr. Ambrish Balega, stock market expert. To you on the global market impact, we have seen India's stock markets open lower today. So your thoughts on global markets as well as India's stock markets in particular?
Typically the first reaction to any war is caution, and because of which we see the markets correcting. And already we have seen the Indian markets correcting. I think the global markets, overall will correct. But then I think it's most important to see whether this is going to be a short one or whether it will be a long-drawn war like what we have seen for Russia-Ukraine. Because initial reaction is like what I've told you. But then, again, if it goes on for long, then it can also turn out like Russia-Ukraine, where it becomes a new normal. So after the initial reaction, we could actually see the markets consolidating at those lower levels, and then possibly, based on how the war goes, I think we'll see the reaction later. But right now, I think we'll see some more downside.
Right now, in the near term, you're anticipating more downside and a knee-jerk reaction. But do you believe this is throughout the commodity space as well? Of course, equity markets, you believe that, Mr. Amrish Baleka?
Yeah, I mean, like the effect is going to be felt across all the commodities. I mean, clearly, we have already seen oil bouncing back, and I mean, there would be a passage to safe haven. So you'll also see the gold prices moving up.
All right. Thank you so much, all of you, for sharing your insights. And we will be back with more news and updates after a very short break.